Well, lookity here. Tesla stock jumped up almost $75 today. Actually past $75 after hours. It was up almost $80 total. Crazy stock. So, now you might be wondering, oh man, I wish I did that strangle. Well, perhaps. But also perhaps not. Because when the stock price goes up and you have a strangle, that means your put becomes a lot less valuable. So, as I mentioned in my other video, I was thinking about doing a debit spread on Tesla, a call debit spread. Basically, that would include buying an option out of the money. So say we want to buy May 1st. I'm not going to do this right now because we're after hours, but so buy May 1st, and then you sell a call where you don't think it'll get into the money. So instead of paying $2,500 for this option, you're only paying $1,200. You're half the risk, and you're betting on the stock going in one direction rather than trying to, oh, I don't know where it's going to go. Playing strangles on earnings are tough because they're priced in. Playing a debit spread on earnings, if you think that the price is going to go up in the stock and you're confident in that, do a debit spread instead. It's the smarter option. So why is Tesla stock up so high? Well, part of it's because the company called back some of the employees, or they're going to call back some of the employees to work in Fremont at the factory. So that's some good news for the stock. $80 good news? Not sure. It might just be a pre-earnings run-up as well. The other thing too, I was looking at, I just saw this come across today. Some people are doubting whether or not Tesla can actually deliver the $500,000 or 500,000 car delivery guidance. So when Tesla comes out with the guidance for the rest of this year, or for the next quarter, it'll be a big determination in this. So that's another thing with the strangle that's risky, is that because we had such a big bounce today, sorry, not in this one, Tesla stock. Because we had such a big bounce in Tesla, that our put was way back over here, right? It's way out of the money now. And we're closer to our call, right? Our call put, or call option. Because this jumped up so much, if for whatever reason they fall back on earnings, so they go back down, then both your call and put will expire worthless. They won't expire anywhere near in the money because now Tesla has this big gap up. So the only way you'll make money basically is if this keeps going up, because Tesla's for sure not going to drop like $200 in the next day, right? I mean, it could, but most likely not. So basically your put's going to expire worthless, and then your call is your only way to make money. And your break even was at what, 820 as we said? On that one strangle particularly. So check out the other video if you never saw it, but just throwing it out there, just an idea. So the best play would be like call debit spread if you think it's going to go up, or a bearish put credit spread, or bearish put debit spread. Bearish put debit spread. Sorry. Oh, it's been an early day for me. I'm over here in Hawaii, so it's 10:45 in the morning. So I woke up early for the stocks this morning, as I do every day.